Hello everyone, welcome to the ichimokocharts.com daily analysis for the Euro US dollar FX for Wednesday, March the 14th, 2012. Well, a continuation of the trend to the downside today, and here we have a black body candle that's made a lower high and a lower low, continuing that trend to the downside. The black body denotes the sellers making net bearish progress, and the sellers have taken control of this market. Not terribly strong control, because they've closed the market midway between the mid-range level and the low, but they did lose some commitment as the market tested around the support level at 130.25. I've highlighted that area as an important level. It's been tested on 4 occasions when the market tested down through or to that level, and we've seen the sellers lose commitment around there previously, so there is a possibility that we could see some buying coming back into this market because of that level. So it's a very important level to watch for the next day's trading. In terms of Ichimoku, the market is trading just below the cloud, and that suggests that we have a bearish market now in big picture terms, in terms of the trend. The breakout has been on a fairly bearish candle, but a candle where the sellers only have fairly weak control. So perhaps a stronger close to the downside below the cloud would be more significant. We have a very moderate amount of cloud here where the market's trading at the moment, and it does offer only a very modest amount of support or resistance for this market. Just looking to the upside here today, the market attempted to rally through the top of the cloud as well, and that held as resistance, and that also coincided with the 130.79 level, so that's an important level to watch for tomorrow's trading as well. Now, in terms of the shorter time frames, the market is trading below the Kijun-sen and the Tenkan-sen, and that suggests that the market is bearish in the medium term and fast term time frames, and the Chikou span is below the corresponding price action, confirming the overall bearishness that we're seeing in this market. Looking at the Tenkan-sen, that is trading below the Kijun-sen, so that is another bearish signal in this market, and it did occur a few candles ago, and it did occur above the cloud, and that means that we have a fairly weak signal in that case, and that's basically because generally when that happens, the price action will be interacting fairly quickly with the cloud, so it does limit the amount of downside that you could expect from that type of crossover. Quickly looking at the Tenkan-sen, that's pointing down fairly sharply, and that's reflecting this very strong downside momentum that we're seeing in the market. It does suggest that if the market does rally, then it will offer itself as very strong resistance for this market, and that's trading at 130.150. So if we see the market rally, that will be a level that we should expect the market to hold up and the sellers to come back in. So another important level coinciding roughly with this 130.145 level that we should look to as resistance as well. So for the next day's trading, certainly to the upside, 130.79 is an important level, but we don't have any signs that the market is going to rally. The buyers don't have any strength in this market at the moment, but the 130.25 and the low of the current candle at 130.10 is very important for a potential continuation of the trend to the downside. Next to the Aussie dollar, US dollar, and here we see a very large black body candle. Previous day's trading we had a white body candle, and it did set the market up for a potential change of trend, but that didn't happen. We had the market failed to establish a higher high and a higher low, and failed to bounce outside of the top of the cloud, and I think this highlights how strong the resistance around that top of the cloud is. The sellers have come back in force in this market, a very large black body candle with the sellers making very strong net bearish progress. The last time we saw this type of candle was around this area here, and then we did see some sort of a rally. So it wouldn't surprise to see the market rally, although we did have 3 days of large black body candles previously. So this is just one day following a white body candle. The black body tells us that the sellers made a very large amount of net bearish progress, so it establishes that they have very strong downside momentum. They've also closed this market with fairly strong control, and they've shown some strong commitment to taking this market lower, but the sellers did lose commitment around the 104.50 level, and we can see this shadow on the bottom. It was an area of previous resistance and then turned into support for these three candles, and now for today's trading has acted as support, so that is a very important level. At the moment the market is trading down below there, so that could be significant. The low of the current candle is very important for continuation of the trend to the downside, and if we do see the trend continue down, then we do have support down at 103.77 and then down to the bottom of the cloud around 103.30 roughly. In terms of Ichimoku, the market is neutral by trading within the cloud, but bearish in the medium term and fast term time frame by trading below the Kijun Sen and the Tenkan Sen, and the Chikou span is below the corresponding price action, so confirming the negativity that we're seeing in the shorter time frames, but not confirming the neutrality that we're seeing by trading within the cloud. So overall, a market that's showing no signs of bullishness any longer. We actually have the market making a series of lower peaks and lower troughs, as well as a lower high and a lower low. So in both of those time frames, it confirms what we're seeing with the Ichimoku indicators, the Tenkan Sen and the Kijun Sen. So a market that's bearish in all of those time frames, except for the higher time frame, neutral in the higher long-term time frame, but also the short-term dynamics are suggesting a bearish market and continued bearishness. So watch down around the 103.77 level. Moving to the US dollar Japanese yen, and here we see a continuation of the trend to the upside, a very, very strong market here. We have another white body candle, and we've had the market open down towards the low and close up towards the high. That suggests that the buyers have been in control for almost the whole day. So a very, very strong market in terms of the short-term dynamics. The market closed with the buyers in control and strongly committed as well. They've shown good strong commitment, and they've increased the size of the body of the candle slightly, which is what you like to see as the trend is continuing up. The market also took out two important levels of resistance, the 83 level and the 83.28, and took them out in a very, very bullish manner. Trading above here, we do have some resistance at 84, and that's an area to watch for the next day's trading, and above there 84.50. Above that level there isn't any strong resistance until the market trades to 85.51. So if we do see a bullish breakout up above there, we could see the market trading to 85.50. In terms of the Ichimoku indicators, the market's bullish in all three time frames by trading above the cloud, the Kijun Sen, the pink line, and the Tenkan Sen, the green line. Very, very bullish in all three time frames. And the Chikou span is above the corresponding price action, and that's confirming this bullishness that we're seeing in this market. Now to the downside, if we do see the market test down low, we do have potential support at the 83.28 and the 83 and the 82.79 levels, but the market doesn't look like it's going to do that. Certainly I doubt that we would break down through the 82.79 level. If we did, then we do have a large zone of previous resistance that could offer itself as support. Significantly, the market broke out above that strong resistance level or zone in a very bullish manner, and that really highlighted the strong momentum that was in this market over the previous few weeks or month or so. And we can see how the market went on with the move with these two very, very bullish candles. Now, as I've mentioned quite often previously, when we see a lot of bullishness in the market needs to rest, and we can see here this was a rest type day with this black candle that really didn't go anywhere, where the sellers had no strength, but it was just a matter of the buyers taking a bit of a well-needed rest, and that could happen around these levels when we've got such extreme bullishness in the market. So it wouldn't surprise to see the market test 84 and for us to have the sellers at least make some bearish progress, but certainly I doubt that we're going to see the sellers take strong control of this market. So for the next day's trading, the 84 level becomes important for a potential continuation of the trend, but also watch around the 83.28 level.